Welcome to our July 20th call for the Leaders in Housing Counseling. Thank you, everybody, for joining us. We will have, I think, kind of a run through quickly on today's call. We have, we'll do our federal funding update and a little bit of progress on the House side. I'll talk a little bit of the latest on the Leaders in Housing Counseling meeting next week. Certainly want to fill in those people that are not able to attend, and maybe a little extra information for those people that are coming. Looks like a packed house, looks like a great and deep conversation. So I think we'll be really pleased with the content of the meeting, and looking forward to being with you all. But mostly the call will be with Boston Community Capital people and their SUN program, which has been kind of a long time innovative answer to the foreclosure crisis that really keeps people in their houses at an affordable rate. And we'll do a quick joint NHRC plug, and we want to say we've actually had a record month this month in terms of renewals, and I understand a couple of you are planning on joining who are new, and really appreciate the support. This has been great. But let's dive in. So Matthew, why don't you give us the latest on the appropriations and what's going on?
All right, just a few things to mention on the federal funding for housing counseling. So on Monday of this week, the full House Appropriations Committee passed the THUD bill. It was almost exactly the bill as written. There was only one amendment that passed, which was Chairman Diaz-Balard's manager's amendment. It shifted around a few $1 million, but more or less it was just technical fixes. So that means that we were, just as in the original bill, we were funded, housing counseling assistance was funded at $50 million, which folks know is a $5 million increase from FY 2017. One encouraging sign, so Congressman Dent and in particular through our friend Alan Jennings at Lehigh Valley Community Action, worked really closely with Congressman Dent, was really, was talking with him almost daily throughout since the THUD bill was released, trying to get some of that, at least some of that $5 million restored. Congressman Dent wasn't able to, but he did. So at the markup, it opens with the subcommittee chairman gives his kind of opening remarks, then the ranking member, and then the full committee chair and ranking member give their opening remarks. Then they kind of turn it over to the full committee and see if anyone else has kind of opening remarks. So Congressman Dent was the first one up, and spent a few minutes just really talking about the value of housing counseling, talking about the impact that it's had in the Lehigh Valley in his district. Talked about that we had lost $40 million from the National Foreclosure Mitigation Counseling Program in FY 2017. And, kind of looked at Diaz-Balart, and, clearly they had talked and said, so I look forward to working with you to restore that $5 million as the process goes through. So, he's been a champion for us all along, but it's just really encouraging, and particularly because he's a Republican and he's a chair of a appropriations subcommittee. It's really important that we've got him on our side, and, this is clearly a cause that's near and dear to him. And so, it's great that we have him as an ally. He'll be at our national meeting next week. Bruce will talk about in just a minute. But just wanted to mention that to folks. The one other thing that update that happened just as I was getting on the call is we received an email that the Senate has done their appropriations, the allocations to the appropriations subcommittees. So the THUD allocation there is actually $5 billion higher than what the House has. So they have, a significant amount of money, more money to play with than the House did. So, we're just kind of turning our attention to the Senate, but there's obviously room then for us to come in at a higher number on the Senate side, and then, assuming they actually do a joint, House and Senate get together and hammer out the difference, it's obviously possible that we can end up with a higher number than the 50 million. So that's what I've got for federal funding. I don't know if you want to add anything there, Bruce.
Well, if you're from Maine, now's the time to reach out to Senator Collins. That would be kind of a critical issue, and certainly communicating to people in the Senate about the urgency and need for housing counseling. I know there's lots of other issues as well, but we're probably the only ones who will champion housing counseling. So trying to make that to be the first on your list would be really helpful. But I know Matthew will be working on this a good deal over the next few weeks, and we need to do as much as we can not to lose any more ground.
And I'll just quickly mention, so as I said, the bill was basically unchanged from the draft that they released before the subcommittee markup. So just in terms of what other programs that are probably important to people, CDBG loses 100 million, so it goes from 3 billion to 2.9 billion. Home loses 100 million as well. And both of those, remember, were zeroed out in the administration's proposed budget. So, I mean, those are obviously huge hits, but they're not zeroed out. There were a few others. I don't have my notes in front of me, but the numbers that we had talked about previously are all intact in the final bill or the bill that's going to go to the House floor.
Okay. So the other big news is next week we're going to have our National Leaders in Housing Counseling meeting. We've talked about it on the call already. I'm not going to go too much over old ground here, but it does look like this will be a real opportunity for us to move a number of major issues forward. Some where we do our own internal thinking, some we do with some deeply supportive allies in our work. It turns out we've had a couple cancellations, and there are a couple spaces available. I'm not going to make a big push for it, but if you really would like to come, shoot me an email, and we can squeeze a couple more people in again. But it's pretty full house, and I think great people, and I think I'm very pleased with everybody who's coming, and I think we'll have great leadership there. So so Adolfo Marzal, I actually spoke with him yesterday, prepping him for the meeting. He is the special advisor to the secretary at HUD, and has got a specialty in finance, but and not in housing counseling, but he's a key person at the table in these conversations. Very eager to learn about it. I know that HUD staff and Sarah Jarica sat down with him about this as well in preparation for our meeting. We've got an ambitious agenda around FHA. There are critical issues here, some of which we get much more effective incentives for people to go to counseling who are getting FHA loans. Can we build in FHA into the delinquency and default process? We build housing counseling into the delinquency and default process. And we've had some hints that there's an openness in the administration to funding housing counseling out of the mortgage insurance fund, and trying to make that operational, or actually make it happen and then operational. I mean, there's lots of big issues. We're not going to decide these things at the meeting. This is the first start of the conversation. There are others we'll need to bring in as soon as they have been confirmed in the Senate. But there's a wonderful openness to these issues right now, and we have and we're making and so this will be the start of a lot of work on those big issues. So we'll have Charlie Dent in the membership meeting. So if you're a member of NHRC, we got a very nice membership gift that people get when they come in Thursday morning, and we'll have Charlie Dent. And we're hoping for a very candid chat with him about politics in this country. As you may know, as you watch the news, Charlie has become one of the most important politicians in the country, representing a Republican district in small town Pennsylvania, Allentown, Lehigh Valley area. He's also a very thoughtful guy, very aware of what government can do, and has been critical in a number of issues around the budget, but also around the healthcare and other things as well. Very well connected to his district, very well connected to housing counseling programs in his district, which has been very helpful. So, and he's a delightful guy to be around, smart, and I think co-chair of the Tuesday Club, which is a moderate Republican grouping, and regularly mobilizes them around key issues. So I think that'll be a fascinating conversation. We just learned, Matthew's been working on this for a while, that Senator Menendez is going to join us later in the morning. He's been a critical ally around housing counseling in general and around some of the regulatory issues, but continues to be interested in trying to figure out, for example, how to open up the doors on HAWK again, this program to incentivize people to go to counseling using mortgage insurance premium reductions. So again, somebody deeply seasoned in the business. Again, it'll be a fascinating conversation. And we'll also use that time to talk a little bit about the directions of NHRC and where we should be going. Another big area we'll be doing, which you didn't put on the list, was around innovation in home ownership, some programs that we think have potential to be game changers in the process. And I wanted to use this in the conversation because it'll all kind of flow together in the afternoon on Thursday, which will include everybody. We're going to spend 2 hours on the big questions of marketing and messaging housing counseling. And we've got Creative Marketing Research, which is the group that HUD has contracted with about these questions, and done a lot of very good work. So they'll have a good presentation. It looks like the Mortgage Bankers Association will bring in their expert on social media. They'll have Fannie on their work on doing focus groups around housing counseling and how it's viewed by brokers and real estate agents. We'll have a number of other resource people at the table. It should be a pretty vibrant conversation. You have your experience around marketing, but what we're trying to do here is to use this kind of growing elected talent there to improve our skills and delivery. We are about to launch a big initiative with some localized events, and we'll hopefully know more about it at the meeting next week, that will fit into all this and give us a chance to really kind of experiment and work with some of these models. So lots of promising things, lots of collaboration, and and I didn't mention, actually, we will have a stakeholders meeting before the Leaders Housing Council meeting with the NBA and the realtors. And this, of course, is the culmination of the 4 events that we did around the country to promote housing counseling, working with lenders and real estate agents. We'll have some of the people who are at those meetings, and then the idea is to kick off a round of some more of them around the country next year. And plenty more. There'll be a lot of things happening at this, and very glad you're coming. Well, actually, not everybody's kind of got that. So, and we'll do our best to do a really kind of detailed report about what's helpful in the August leaders call to be able to move us forward on all these issues. So I think that's it on the report. And if somebody still wants, we do have a couple of seats available if somebody would love to get in, so that's a possibility. Okay, so let's move on. And our next topic is with Boston Community Capital. It's been a long time progressive lender based in Boston and Massachusetts area, and they've done some very innovative work on and being able to keep people in their houses and reducing their mortgages by by purchasing the loans and redoing them. And I had thought this was a limited program to the Massachusetts area, but it now turns out that they've been doing this work in other states as well, and so it seemed very appropriate to bring in and see what the opportunities are. We have Jennifer Angarita, who's the project manager of strategic initiatives with Boston Community Capital. So Jennifer.
Great.
Please.
Awesome. Well, hello, everyone. Thank you so much, Bruce and Matthew, for inviting us to speak to you today. My name is Jennifer Angarita, and I'm here today representing Boston Community Capital's SUN initiative. I'm also joined by my colleague, Linda Diani, who's a processor and underwriter with SUN.
Hello, everyone.
So we're excited to speak with you today. We're going to talk a little bit about, an overview of SUN and Boston Community Capital. So BCC is actually a nonprofit with a 30-year track record of investing in affordable housing, childcare, schools, and community services that create healthy communities. So I'm here today really to talk about our SUN initiative, which is a foreclosure relief program, as Bruce mentioned, that helps homeowners facing foreclosure to stay in their homes with mortgages they can afford. And we created SUN back in 2009 because we were really concerned about the impact of foreclosures on families and on neighborhoods. And we work really closely with housing counseling agencies across a number of states, and we're actually right now in a period of some growth and moving to new states as well. So in terms of the workshop for today, we're going to talk a little bit about how the SUN program works. I'll give a little bit of an overview. I'll illustrate an example of some actual homeowners who have gone through the program today. And then we'll talk a little bit about the eligibility requirements and guidelines in terms of who can apply for SUN and who's eligible for it. We'll go through the product and the process itself. And I'll talk about some of the materials and collateral that we have available to housing counseling agencies and how we've partnered with these groups in the past. And we'll share our contact information. And then Linda and I are happy to answer any questions that folks may have. And so we'll try to kind of speed through this earlier part and definitely give some time for an interactive Q&A session. So sort of to jump right into it, the way that SUN works is that we work with homeowners who are behind on their mortgage, but who have stable incomes. We buy homes back from the bank and resell that to the homeowner on the same day with a 30-year fixed rate mortgage that they can afford. We're one of actually only 2 programs nationally to use this model. And since launching in 2009, we have provided over $100 million in mortgages to help over 800 families stay in their homes. And on average, we reduce the monthly payment and the mortgage principal balance close to 35%, though that figure really depends on the kind of situation of the homeowner. And based off the hundreds of families we work with, now that they have a mortgage they can afford, they can make their monthly payments on time and are able to build equity again and also increase their credit scores. So we actually have 3 products. So some folks who may have known it from us early on back in 2009 may not know some of the newer products that we have offered. So this presentation will mostly be focused on the first one, but I do want to mention the others as well. So we do help homeowners and tenants, so occupants of homes that are facing foreclosure or behind on their mortgage, to be able to repurchase their homes with mortgages they can afford. But we also refinance homeowners who are not underwater. And then we also offer a straight purchase product for homeowners in foreclosures to purchase a new home. And that third product is really for folks who have gone through the process for SUN, but for whom we weren't able to actually come to an agreement with the bank. So a lot of times they may be in the negotiation stage when we're not able to come to an agreement with the bank, but they've been able to save up some money to put a down payment for a new home. We are actually able to help them find and finance that new home. So it's sort of a new initiative that we are rolling out and have been doing over the past year. So here's an example of an actual homeowner who was able to save their home in foreclosure. So this home, in this example, the home was originally purchased for $372,000 at the height of the market. The homeowner experienced a hardship. In this case, it was a divorce that really cut their income by 50%. As many of our clients, they range from, there's often health issues, job loss, or divorce that can cause folks to go into foreclosure. So we work with all folks who are, have faced a hardship similar to that. In this case, the value of the home actually plummeted significantly. So this is a home that was underwater. And because of that, SUN was able to sort of have some leverage to negotiate with the bank to purchase the home at the distressed market value, close to $160,000 in this case, and then resell it back to the homeowner at the fair market value with a new mortgage of around $200,000. And so for the owner, this resulted in a 44% mortgage reduction and a 31% reduction in their monthly payment. So This works really well for folks who have experienced some kind of temporary hardship but are kind of back on their feet, have some stable income, and are able to actually afford the home that they're in now. And really for homes that are underwater, this program works exceptionally well for that. So that's sort of a key kind of consideration that we look at. Another example here of just a refinance would be a home that someone purchased for around $122,000. They faced a similar hardship. There was a bank foreclosure. This person had a divorce and a loss of income on the job. And we were able to do a no cash out refinance and preserve over $40K in equity. So the Sun was able to finally refinance the home, and in this case, the monthly payments were reduced by about 10%, but the key piece is that they were able to preserve the equity they already had. And something to note here is that the loan to value here has to be 80-20, so the homeowner needs to have at least 20% equity. But for many folks who have referred to us in the past may not be as familiar with this process, so it's something to keep in mind. So in terms of the eligibility guidelines, a homeowner needs to be a resident of the state that we work in. So that's New Jersey, Maryland, Illinois, Rhode Island, and Massachusetts. And we are launching in Pennsylvania and Connecticut this year. So we are expanding and happy to work with homeowners across those states. So you don't have to be in a city. Even though I know that the name is Stabilizing Urban Neighborhoods, we work across all of those states. And we have deep relationships with housing counseling agencies in a number of those states as well. The second piece is that you need to be late on your mortgage payment, facing foreclosure or facing foreclosure-related eviction, and then also have a stable income. So again, this doesn't have to be just employment income. It could be Social Security insurance or disability insurance, and it needs to be sufficient to support the mortgage at the current market value. So again, this really points to how homes that are underwater can work particularly well. And even though we've seen reports of the foreclosure crisis being over, the reality is that there's pockets of deep distress across all the states that we work in. And so that there are, counties and cities where many homeowners are behind on their mortgage and they're underwater in their mortgage as well. Another consideration too is that the homeowner needs to reside in their home. So it can't be their secondary home, it needs to be their primary home. But overall, these are the kind of basic eligibility requirements that are pretty straightforward. Individuals can apply and be eligible for Sun even if they have poor credit scores. We're not going to look at the number, we're just trying to understand the credit history. And even if homeowners have filed for bankruptcy or been turned down for loan modification programs, they can still be eligible. So Sun can often be a really good opportunity for homeowners, even if they've experienced these other cases. And it's also worth noting that there is no fee to apply, so you don't owe a cent to Sun unless we're able to actually purchase your home. So in terms of some of the kind of key elements of Sun and what makes Sun different than other programs is we have a 6.375% interest rate. We also have biweekly payments, so these are timed to coincide with direct deposit. And homeowners tell us that this makes it easier to budget because the money, isn't coming out in one big chunk at the end of the month, but that they're able to kind of plan ahead and manage their finances more easily. This translates to 26 payments over the year. There's also a capital reserve account. So this is a rainy day fund for emergency repairs, new tires on the car. It's the homeowner's money, but there's an extra month of funds essentially. And that money gets added to a reserve account that they can use to cover emergencies. So again, it could be home repairs or job loss or any other issue that might affect their ability to make a payment. There's also a shared appreciation, second mortgage, and the homeowner doesn't need to pay anything on this unless they sell the home. And at that point, after they pay off the mortgage, the home has appreciated in value. Sun is entitled to a share of the appreciated value, which is equivalent to the amount that the home was reduced in. So to give you an example, if the original mortgage was $300,000 and now the mortgage is $200,000, there's a reduction there of about 30%, about a third. And so when the homeowner sells the home, if it's gone up in $10,000 of appreciation, that third would go back into SUN, and the idea is that money would actually be reinvested back in the community. So SUN right now is actually talking with our advisory board members to figure out what's the best way to reinvest that money in the community. And so we've had discussions about whether this could be a scholarship program for the children of homeowners through SUN. So we're discussing right now the kind of potential ideas for that. We also, buy at the distressed value and then resell it at the fair market value. And so there's about a 25% loan loss reserve there that's funded by the difference in values. And that piece is, it's really just something that's required by our investors, and it's, we're a nonprofit, and so, it's a requirement for our investors to be able to cover our reserves. So again, on average, homeowners are able to reduce their monthly housing payments by close to 35%. And we reduce the principal balance so that they're out from underwater immediately, which is a really unique feature of SUN. So in terms of applying to SUN, we kind of look at the same information that would be looked at during a loan modification. So we're going to look at your income, why a homeowner fell behind on their mortgage, try to understand what other debt they have. And the earlier in the process, the better, but we do take folks, at different stages in the foreclosure process. And so if you have clients who think, this might be a good program, we really invite you to encourage your clients to call SUN, toll-free on our number, or they can also apply online. And so once a borrower is referred to SUN, they're going to go through the inquiry kind of intake process where we're going to screen for basic eligibility. So when you call us, we'll do a simple phone screening to determine whether you'd be eligible for SUN, looking at those kind of key criteria, eligibility criteria I discussed earlier. Then we're going to set up a conversation with a mortgage loan officer who can kind of help the homeowner understand what they can afford to pay. From there, we'll look at, the income, what the home is worth, and go through the processing and underwriting stage, which is where my colleague Linda really handles many of those cases. And we'll look at the same info for a modification, so tax returns, pay stubs, et cetera, really trying to understand how the homeowner is going to be able to pay the mortgage. And if approved, we'll move to the negotiation stage, where we will sign a P&S and we will reach out to the bank and offer to buy the property. And if they agree to sell, we'll do a same-day sale back to the homeowner with a 30-year fixed-rate mortgage. So the process can take, a couple of months. The key piece is really when folks have having all the paperwork kind of early on can help sort of facilitate that process and make it faster as well. So in terms of some of the materials we have available, a lot of this is customizable. We have it available in different languages. So we have an FAQ that kind of answers a lot of the most important questions that homeowners may have about the program. It's front and back page. We also have various articles where SUN has been featured that actually illustrate some of the examples of successful SUN homeowners who have been able to save their homes through SUN. We have posters and flyers, again, in different languages, and we can tweak it to fit your audience and fit your need. We have a large stand-up cardboard poster that we can deliver to your organization at no cost. You can put up in the lobby, and if a homeowner is sitting there, they can has a takeaway brochure that they can take home with them that has kind of the necessary key information. We also do postcard templates that we can mail to homeowners at their home that, again, can be customized to, the homeowner and their specific kind of audience that we're working with. We also do closed loan lists. So if you're curious to find out more information about, the kinds of loans that we've been able to close in your zip code, in your city, in your state, we have that information and we can tailor it to fit your needs. So this is an example of some loans that we've closed in New Jersey. And this was a document I prepared for one of our New Jersey partners that shows a range of the different banks and servicers that we work with, the cities that we're in, and you can see there's really a wide range across the state, and it's often reflective of where our partners are located and the cities and counties that have been most deeply affected by the foreclosure crisis. And this lets you see, what was the original SUN or what was the original monthly mortgage and the monthly payment, and what Sun was able, how Sun was able to reduce that. You can also see the range of referral sources. So we work with housing counselors really, really closely to help them understand the process and work with them, across the process of applying to Sun if they have a client, and are able to sign an authorization form that allows us to be able to update them throughout the different stages. But we also get folks who hear about us from a whole range of sources. So from town halls that we do, from city and elected officials, from articles, et cetera. So I'm happy to talk about that with any other folks offline as well. So in terms of how Sun actually partners with housing counseling agencies, there's a number of ways that we can support you and do, kind of facilitate the work that you do. So we are happy to do trainings and webinars or briefings for your staff. If you have staff on board who maybe aren't part of this webinar but are interested in learning more, we can, again, deliver the customizable materials to your organization at no cost. We can also partner in doing social media and online outreach. We have a newsletter. We can, jointly feature your organization or any kind of clients that you've referred to us who have been successful in the process. And then we're also happy to talk about and explore other partnership and outreach opportunities. So if there's events that are taking place, in your community, or you're having a homeowner workshop, call us, let us know. Well, unfortunately, we can't, pay for referrals. A lot of times we can, pay for the coffee and bagels if you're having a homeowner workshop and you think some of those homeowners might be eligible for Sun. So we're happy to, talk through different opportunities. If there's conferences or trainings or events you think we should be at or can support, definitely get in touch offline and we can discuss that further. So in terms of referring clients to us, it's a pretty straightforward process. Homeowners just need to call Sun at the toll-free number, or they can apply online. It's sunhomehelp.org, and the website has more information about the program. If you have any questions after this webinar as well, I'm happy to answer any of them. I can talk to you offline if you want to talk about strategies moving forward, or if you have specific homeowners that you want to run by with us and see if they would be eligible. Linda as well is happy to chat with you all as well. And then now we kind of wanted to really spend some time actually answering questions that folks may have. So if you have questions, please, I'm not sure, Bruce or Matt, if you're able to unmute folks so that they can ask, or if they want to type in a question online, I can read them out and then answer them as well.
Yeah, so folks, you can type into the question box. If you do want to try to raise your hand, we can call on you as well. We do have a couple. Bruce, did you have any questions to start, or should we go right into the questions that people have submitted?
Well, I have a couple. So clearly you work with people with damaged credit, and that seems a very valuable quality. How do you then do that? How do you underwrite somebody who might have late payments and a low credit score?
Sure. Hi, I'm able to answer that for you. Every borrower has a different profile and different situation that we look at, but one of the key pieces is twofold. You would have likely the borrower we would like the borrower to have saved some money at this point. We look to see whether or not they have recovered from the hardship. So that would be one key piece. So we look to see when the hardship began. We look to see what has happened in terms of recovery from that hardship. And one way to show us that, because credit scores, we don't look at the credit scores in the same way other people do, is how much money have they been able to save since they haven't been making a mortgage payment. And that's one thing that offsets the credit score. And that's really one of the biggest pieces.
And so a lot of people we get have an income loss, but would be able to manage a modified mortgage. In your context, they'll still have the credit problems. Is there a way to think about that?
Well, we would take into consideration how long it's been since they have recovered. So if they have, we'll look and see when the job loss occurred and assess the situation. So if they come to us without any savings, we will give them an opportunity to save the mortgage payment, let's say from time of application through to the underwriting process. So they may only be able to save 1 or 2 mortgage payments by the time they reach the underwriting phase, which is okay. But we definitely want to make sure that there's been some recovery. So the borrower would have to now be employed and back on their feet, or at least on their way.
Or in some cases too, as long as they have, for some folks who are on disability or have Social Security, that could often be enough to be able to pay for the mortgage, especially if the home was underwater. So it might be that, previously they were unable to afford the mortgage at the kind of peak value price, or whatever the original mortgage was, but they have other sources of income that might be kicking in that can support the actual value of the mortgage.
So, Matthew, why don't we take some questions?
Yep. So we've had a bunch of questions come into the question box. Just a reminder to folks that that's probably the best way, but you can also raise your hand and we can try to get you on audio. So Jennifer, I think you covered this. Could you just quickly touch on how long Sun holds onto the property before they sell it back to the borrower, the homeowner, borrower?
So just to repeat, the question is how long Sun holds on to the property before they sell it. So, Lindsay, do you want to take that?
So we would actually approve the borrower for a new mortgage, and then it would go to the negotiations phase where an offer would be made to the lender. And at that point, a closing would take place if we are successful negotiating, and it would be sold to the borrower the same day, I believe.
Yeah, so it's not like we are holding on to the mortgage for, any extended period of time. It's mostly a question of just how long the negotiation stage takes, because it can take a while sometimes to go back and forth with the lender. We'll make an offer, and then as soon as they accept the offer, we'll go back to the homeowner immediately and sell it back to the homeowner.
Great. And I'll just mention, there were a couple of requests. If you could just put your contact info back up, please.
Oh, yeah. Yep.
Thank you. Okay, someone asked if a homeowner who owns a second property, I'm assuming lives in the primary residence but owns a second property, if they could apply for the program.
Yes, they could definitely apply. We would definitely encourage them to apply. We can, for our program, it's primary residences only that we would be negotiating on. So for a second home, we would look to see the status of that property in terms of underwriting. That wouldn't be a property that we would be able to lend on or to negotiate on, but we would, for example, if it was a second home that was truly a second home versus a rental, we would have to carry the entire payment of that second home into their ratios. If it's a rental property that they have, we would cash flow that property and see if there was any positive income, or if there was negative income, we would consider that into the ratios as well. Sometimes people have investment properties that are also that are not rented because they are behind on those as well, and then we'll have to assess that in underwriting. But so yes, short answer is yes, they can apply even if they have another property, but we would have to consider that in the underwriting piece.
Great, thank you. And I think your colleague Sharon is trying to get on. We're trying to get her unmuted, but Sharon, if you can hear me, you just need to hit #65# and I'll be able to unmute you. There were a couple questions about how a counseling agency can become a partner, how they can get the training and the customized materials. Could you just please go back over those things?
Yeah, absolutely. So it totally just depends on the need and timeline of the partner. So really the best way would be to get in touch with me personally, and from there we can just set up a time. You let me know what works best for you, and share a little bit about how many staff you have, et cetera. And I'm happy to handle, like, we can do a webinar. If you're in Massachusetts, we could potentially come in person. If not, we can do it over the phone or through a webinar presentation. And then it really just depends on meeting your needs personally. So the best kind of next step would be to just get in touch with me, and we can have a conversation and proceed to next steps.
Great. And hopefully we have Sharon Shepard on the line. Sharon, did you want to jump in with anything?
Yes, I just wanted to add a few things to the wonderful discussion that we're having. One, I think it's important to talk about the goal of the program. So the goal of the program is to stabilize the homeowner and to rebuild their credit. But it's not to keep them in this 30-year fixed-rate mortgage that's right now certainly above the current conventional interest rates. The goal is really to rebuild the credit and get them back into the conventional market. And so far, we've had about 100 homeowners that actually have refinanced through the program. So again, it's to stabilize them, to rebuild the credit, and then to go back into the conventional marketplace. So I think that's an important concept. And again, we call I know that we've talked about the back-to-back transactions. So we are not holding the property. I think that's really key. We are simply purchasing the property the same day and selling back the same day. So there's not what we call a hold period unless it's required by the bank, and that's very few in the current marketplace. It used to be that Fannie Mae required us to hold it for 90 days. They no longer require that. We are one of 2 organizations that are working nationally with FHFA in a program, a short sale program. So we're working with the GSEs, and we get principal reductions. The other thing that we do get, in addition to getting the homeowners to, getting the banks to work with us, we actually get the significant principal reduction from each of the banks. And we have senior level contacts at the banks, and I would say roughly 50% of our offers that are extended typically result eventually in a purchase from the homeowner.
Great, thank you. So we'll go back to questions, and just a reminder to folks, if you have questions, you can use the question box, or you can raise your hand and we can call on you. So can you explain the impact of property value appreciation on the payoff amount when the homeowner is ready to refinance?
Sure. So I'll give the example I gave earlier and go over that in a little more detail. And then Sharon, if you want to step in and have anything else to add, we can do that as well. So it's a 0% shared appreciation second mortgage on the property. So again, like, the homeowner doesn't have to pay anything on it until they sell the home. And like Sharon said, the goal isn't really to keep the homeowner, there for 30 years. It's really to help them build equity, build up their credit score, get them back in the conventional market and be able to refinance. So at that point, once they refinance or sell the home, after they paid off the first mortgage, if the home has appreciated in value, Sun is entitled to the share of the appreciated value that is respective to the amount that the mortgage was reduced. So to give maybe a different example, say originally, they had an original mortgage of $200,000, but now it was, underwater significantly and is now worth $100,000. And Sun was able to purchase that, by, let's say, $150,000. So that reduction, in this case, if it was 25%, that corresponds with what the shared appreciation mortgage percentage would be. And a lot of times, we encourage folks to refinance when they can, so that the amount that has gone up, that appreciation is often not, a huge amount as well. And so after refinancing folks, after a year or two, they can get back in the market as well. Sharon, do you have anything you want to add to that, or Linda?
No, I think that's pretty clear. I think you did a great job.
Great, thank you. I'm going to combine a couple here. Someone asked if you could work with a homeowner who's in a sheriff's sale. Someone else asked if you could work with someone who's already in the foreclosure process, has already been initiated. Could you work with either of those folks in either of those situations?
Yes, we can. We have
a range of borrowers that are pre-foreclosure. We have borrowers that have already been foreclosed on and awaiting eviction. If the borrower has already been evicted, that's not something we can help with at that point. So we encourage people to apply as early on in their situation as possible so that we have time for hopefully a successful negotiation and go through the process. But yes, we can. We can work with everyone up until the actual eviction has taken place.
And I would add
Great.
there that we're able to stay the foreclosure in many cases. So, for example, if someone comes to us, we get down the path and we're negotiating and there's a foreclosure sale, we are able to get that foreclosure sale typically postponed until we get through the negotiation process.
Great. There were a few questions just about the geography of where you all are. Someone asked specifically about Oregon. Someone else asked if you're expanding beyond states that you're already in. Could you just talk a little bit about the?
Yeah, definitely. So we operate in in 5 states. Originally, it was New Jersey, Maryland, Illinois, Rhode Island, and Massachusetts. We started out in Massachusetts and expanded. And right now, we're actually in the process of expanding to Pennsylvania and Connecticut. So that's really what is on our kind of timeline for the foreseeable future. I don't know that, I can't answer the question about whether we're going to expand beyond that. I think that's Sharon, if you have thoughts on that. But so that's 7 states total, really, mostly in the East Coast, plus Illinois.
Great.
I'll just add a few things. There is a program for the person that asked about Oregon. There is a program very similar to ours. It's the only other one that is similar to ours that's operating out of Oregon. Eric Sten runs the program, and I would encourage you to contact them because I do believe that they are very successful in their program as well, and I know that they're working very closely also with the GSEs.
What's the name of the program?
I'm sorry?
What's the name of the program?
Oh gosh, I can't pull it up. I can send it to you.
Well, if you could share it with us, and yeah, right.
Yeah, if that person could follow up with us, we can make sure we connect you with them. All right. Could you all talk a little bit about underwriting guidelines? And they specifically asked about housing and debt ratios.
Sure, yep. We work with ratios, housing ratio, front ratio, 38%, and the housing plus debt exposure ratio, which is the back end ratio of 48%. What was the other part of the question? I'm sorry, I missed.
I think I just deleted it, but I think they said housing and debt ratios.
Oh, housing and debt ratios. Okay, so housing is 38% and 48% would be the debt ratio.
Great. And then someone else asked the interest rate that you sell the mortgage back to the homeowners at?
That is a 6.375, 30-year fixed.
And I think you touched on this.
Let me just add to that, I think it's important to understand the interest rate we recognize is above conventional lending at this time. And it has to do with the cost of our capital. So we're borrowing money from banks to do this program. And so we're borrowing at a certain rate and then lending. So it makes economic sense in a sustainable way for us to operate.
Right. And I think you touched on this, but just to be kind of explicit, someone asked, does that mean that you purchase not only private investors, but also Fannie and Freddie loans?
Yes, that's right. We will negotiate with Fannie and Freddie, and also we have some borrowers that have previously been in FHA loans that are in default.
And we are dealing with private investors as well. So typically a private investor will use a servicer. And so we have relationships with those servicers as well. And again, we have relationships with all the major banks.
We have a comment from someone who's very excited. They said the program is awesome, double exclamation. We have 11 happy families who have used the program. That is from Jan McInerney.
Wonderful. Hello, Jan.
Hi, Jan.
Someone asked, it's kind of a long question, but they asked specifically about a scenario where there's a death in the original homeowner is deceased, a family member inherits the home but is not on the note. There's a hardship. The hardship's been cured, but they're in the process of foreclosure. I think their question is just whether the program would be a fit for someone in that scenario.
Well,
I'll take that.
Okay.
Sorry. I was going to say, absolutely. We do help homeowners. It doesn't necessarily have to be the person that's on the existing mortgage. So we're dealing often with family members that inherit homes. So that's absolutely a party that we may be able to help, and they would, if they qualify for the program.
All right. So there's a few. I'm not going to go too far into these, really kind of case-specific scenarios. Someone did ask if Chase. They said Chase was not on your list. Do you not work with Chase?
Yeah,
we
so
do work
that
with
list,
Chase.
that list was not exhaustive by any means. That was just a sample of some loans in New Jersey. So we do work with Chase as well as a number of other servicers and investors.
Okay, great. Could you just go back over a little bit the process for counseling agencies to make referrals to you?
Sure. So, we ask for counseling agencies or counselors who are working with clients to, kind of see if the homeowner meets like the very basic eligibility requirements, which again are, a resident of a state where we operate in, having some stable income, and then being behind on their mortgage or in foreclosure or facing foreclosure-related eviction. So if they meet those three basic eligibility requirements, we ask that you refer them to SUN. So the only it's pretty straightforward. Just have them call us, the number currently, on the screen, or they can apply online as well. And we have lots of materials and collateral that, describes the process and has this information as well. So you could just give a handout to a homeowner and they would have that information, at their fingertips.
Great. Can the homeowner choose not to refinance their SUN mortgage and just maintain the mortgage as is?
Yes, absolutely.
Great.
They can stay in the mortgage if they want to.
All right. The person who had asked about sheriff sales followed up and just asked how you can possibly assist a homeowner that has had a sheriff sale. I may have misread the question the first time, but go ahead. Sorry.
No. Yeah, I was going to say, so that's, it's a great question. We do deal on the REO side, so a real estate owned asset that's been taken back at a sheriff sale by the bank. If, however, an investor has bought it at that sheriff sale, that's a good question whether or not we'll be able to purchase it from the investor. There are many cases where we can. Oftentimes, the investor doesn't want to go through the eviction process, and if we're able to offer a competitive offer, then they will accept our offer. So again, we're a cash buyer on the purchase side, so they're really incented to work with us. But if a homeowner that is at the sheriff's sale and they want to move into it, then that's a situation where we often can't help and negotiate with that perspective.
Okay. All right. Someone asked what your success rate is when negotiating with lenders.
As I mentioned before.
Go ahead, Sharon, you go.
I was going to say, as I mentioned before, if the homeowner gets to the stage where they're at the offer stage where we're making an offer, we get about 50% of our offers accepted through the negotiation process. Now, I'd also say that a number of our homeowners also will consider modifications. One of the things that our offer does is it causes the bank to pay attention to this particular file, and so they will often offer a modification at the same time that they're considering our offer as well.
Great, thank you. So we're getting close to out of time. We do have a couple people who are going to, hopefully we're going to bring in Linda Gerkensmeyer to ask a question. Linda, are you there?
I'm sorry?
I was trying to get someone on the phone. Linda Gerkensmeyer, can you hear us?
Yes, I can.
Do you have a question?
How does our agency actually work? Just referral, or is there additional steps that the agency can work with? And if there is any opportunity there to partner in a bigger way, is there any opportunity to take a more active role?
I would welcome you to give me a call. I was going to say, I welcome you to give me a call after the seminar, and we can chat about that.
I would be glad to. Thank you.
Yep, and the most straightforward way is to refer folks to the number or the website, but we're happy to discuss further opportunities and other ways we can partner.
Okay, thank you.
Great, thanks, Linda. And just as a few folks have asked for the PowerPoint, is it all right if we share that with folks after the call?
Absolutely.
Great. All right, so I'm going to leave it there. We got through just about all the questions. So I'm going to turn it back over to Bruce, but thank you all so much. This has been a very helpful presentation.
Thank you.
So I have one more question for you. So you have a product that's you described it as if people lost the house, that you could help them potentially purchase a new house. And I mean, we certainly have had people come to us, to our programs, who have lost the house through foreclosure, and there's typically a 7-year wait period. Are you? Is this a program that might apply to them, and that they could get in earlier than that? And is that a feature that council should be aware of?
Well, the current product we have, the straight purchase product, is really for folks who have been in the pipeline. So they've inquired into Sun, they've gone through kind of the pre-qualification through the negotiation stage, and for whom we just haven't been able to make an agreement with the bank, which does happen. And so for those folks, it's an 80-20 purchase product. So they need to have been able to save up enough to make that kind of 20% down payment. So it's not for folks who say have not gone through the Sun program, have already been evicted, unfortunately. So we have had conversations here about, if Sun could play a role, in helping distressed homeowners in those situations. But as of this moment, we don't have a product specifically targeted for that audience.
Okay, well, I mean, that might be an area that my councilors might have some interest in. Cool. Well, thank you so much. This was a terrific presentation, and we'll circulate your deck, including the contact information, on our listserv probably tomorrow. Good. Thank you so much, all of you. Cool.
Thank you. Appreciate it.
And good. So our next call will be after the leaders meeting on August 3rd, and we will do we'll certainly do the latest update on what's happening on the Hill, but spend most of the call on kind of the leaders meeting and lessons learned, and some of the product and where we're going from here. So I think it should be a helpful and interesting conversation. There won't be a call on the 17th of August, so you can take that day off. Well, okay, I'm only kidding, but so we won't. We'll only have one call in August and pick up the regular schedule in September. And then the last piece is that, which to encourage you all, if you haven't already, to join NHRC. We are continue to grow, and we are continuing to fight the good fight on funding sources, on creating creative mechanisms to build the housing counseling work and create more opportunities. And then we also have all our educational activities we're doing, where we're exposing groups to some of the more innovative things being done in the field about new lines of business, and things, as we discussed today, on products that may not be as widely known as they should be. We'll plan for more of these next year, and would have people that join, organizations that join, really help strengthen our work. And you always have a special seat for us at the national conferences and things like that. So glad to have you if you've already joined, and please consider joining if you haven't. So our next call will be in 2 weeks, and hope to see some of you at the conference next week, which I think looking forward to. Thanks so much. Bye.